It's Walter here, and you are here at the Naked Trading webinar. So we're going to talk about swing points today, and I'm quite excited. What I'd love for you to do is, in the chat box, let me know which currency pairs you'd like to have a look at, and we can do that right now, okay? So just go ahead and in the chat box, just tell me which one you would like to see, and we will use that one as an example. I'm also going to show you a trade that I'm going to take today on the Singapore dollar, on the US dollar, Singapore dollar. And let me just have a look here. Yep. And then we'll open it up to all the charts. If you want to see the charts from a naked point of view, I'll be happy to share those with you as well. Okay. So that's basically it for today. So I'll tell you basically how I approach this. There are at least 3 things that I need to have in order to identify a swing point. Now, why would you want to identify a swing point? Well, one of the reasons why swing points are so critical is that traders typically, most traders I know, most traders want to trade swing points. That's why this webinar is going to be of interest to most traders. Most traders don't see well, actually you can do here, let's do the test. All right, I'll let you do the test. Let's say that you're looking at, maybe I'll give you a better one actually. Here, we'll do this. Look at this chart right here. This is the Euro Pound 5-minute chart. Now, what I would like to ask you is, this chart's been going up, the market's been going up. Would you be more likely to buy this chart or sell? That's a question for you. Given that, and this is probably not a good, it's probably not, here, let me find a better one for you. Here, let's do this one. This is the yen. And the yen has been making lower or higher lows and higher highs. Would you be more likely to buy the yen right now or sell? What would you be looking for? A reason to sell or a reason to buy? Not saying that right now, this minute, that you'd make a trade, but if you saw this chart and you said, I'm going to trade this chart today, there's a couple of different ways you could approach it. Like some traders are going to look at it like this and they're going to draw a trend line and go, well, if it comes down here, I'll buy. Other traders are going to say, well, if it gets above this spot right here, I'm gonna buy. If it breaks that high, I'm in. I'm gonna go long. I'm not saying that either of those are wrong. Some traders are gonna say, well, if it gets up to this level again, I'm gonna sell, right? So there's all different types of ways of trading this one chart, and some of them are going to seem more comfortable than others. So when I said buy where this little rectangle is that I put, this little spot right there, if you thought to yourself, no way would I do that, then you're probably not a trend trader. Because trend traders expect it to keep going, right? That's the whole point. The market has broken a high, so it's going to keep going. If you're a swing trader, then you might be more tempted to buy off of the trend line or sell off of the horizontal support and resistance, which is that other line that I just took down. So really it depends on your point of view. Matthias says, I wanted to buy. Yeah, so you might be more likely a trend trader or breakout trader. Those people are more likely to wait for the explosion and then they get in on it. Other traders are more likely to wait for a bounce off horizontal support and resistance or trend lines. Now let me show you kind of how I do it. And I'll give you a few tips I think are well worth your time in testing them, okay? So let's talk about, let's say that we were going to trade the 4-hour yen chart. All right. If we were to trade the 4-hour yen chart, then what we might do is possibly do something like this. Go to the daily chart, okay, and then draw in support and resistance areas, okay? So I'm going to take away all these. This is from an old trade. I'll take away all these prices and stuff like that. But the easiest way to see these spots is to go line chart first. You put your resistance at the extreme high, your support at the extreme low, and then you look for everything in between. Now, the things in between should ideally have both resistance and support. So for example, see this area right here? See how I've got both resistance where the market hit this level here, and then I've got support where the market came down and actually bounced right there. This is kind of, you know, ideal really to see both resistance and support, and that's what I'm looking for. And another thing that I'll mention is that this little jig right here is not insignificant. That little jig right there is actually quite critical that it did that, and it kind of confirms that it was I'll show you another chart that's happening right now. It's the Kiwi, where, you know, and the CAD yen to a lesser extent, but you can see this sort of move where it breaks for a level, comes back down and bounces off of it. It's a really way to trade, I've found, and many other traders I know, is to trade that bounce like that. Okay, now here is our support, resistance, resistance. Here is our resistance, support. Here's another one. And now that I've got all these in here, all I really have to do is wait. I'm going to wait and see what, you know, is the market going to get to these spots. That's basically how it works. Okay, so the first step when I'm looking for a swing point is essentially what I'm trying to do here is pre-identify them by drawing in horizontal support and resistance. Now again, remember we said we were trading the 4-hour chart? That's why I'm drawing this on the daily chart. So drawing support and resistance zones on a higher time frame chart. Okay, so that's the first thing that I'm going to do when I want to trade. If I'm looking to trade swing points, which again, most traders are not trend traders. They don't look for a breakout or a trend continuation. They're looking for that turning point, which is why this webinar is of interest to most stylists of trading. Most traders are looking for that swing point. They want to get in on the reversal. Now you can trick yourself, like you can find a really strong trend and trick yourself into trading that trend by essentially placing a trade at on the end of a retracement against the trend. So it is possible to still take advantage of the trend, even though you're a quote swing trader. But there's a few things that are a little bit tricky about that, and we'll talk about those in a future webinar. In fact, I'm gonna make a note to myself that we will have that one, that webinar in a couple of weeks. Okay. All right. So number one is finding the horizontal support and resistance on the higher time frame chart. So again, we're trading 4 hours, so we're doing this on the daily. Number two is we're looking for patterns. Okay. So we wait patiently for the market to get to these spots, and then when it gets there, we wait and see, okay, are there any reliable patterns, right? Now remember, we're on 4 hour here, so we can actually break it down and look for some reliable patterns. The next thing that we want, and I'll show you a few of those if you want. I mean, I know a lot of you probably read the book that I wrote, Naked Forex. In the Naked Forex book, there's tons and tons of patterns, but we'll go over a few right here, okay? This is not a kangaroo tail. The reason why this is not a kangaroo tail, does anybody know why, by the way? Can anyone tell me why this is not a kangaroo tail? Why isn't this a kangaroo tail? What's wrong with this candle here? It's weird, right, that it's not a kangaroo tail, but it's not. And the reason why it's not is because the open and the close are not inside the previous candle's range. See, this previous candle right here has a low of 113.16. And what is the close of the kangaroo tail? The kangaroo tail closes at 112.99, so it's 14 pips away. So it didn't actually close inside there. Now the open, of course, is inside the previous candle's range, but this one is not. Now this one's got all the characteristics of a kangaroo tail. The open, the close on the top third, The tail's nice and long and is extended beyond the horizontal support and resistance zone. But the open and the close are not inside the previous candle's range. And we don't see the next one of the next two candles trade higher. So this candle and this candle both did not trade higher. So actually, even the third candle didn't trade higher. It wasn't until the fourth candle that it traded higher. So there's a couple of issues with this one. But this is the kind of reversal candle I would be looking for. Something like this, especially if the next candle traded higher than the high, especially if the close was higher and was inside the previous candle's range. This would be a really nice bullish kangaroo tail. Now, the other one that I like and a lot of people know about is, of course, the big shadow, right? Now, the big shadow here is just a special case engulfing candle, which is the largest candle of the last 6, 7, 8, 9, 10 candles, however stringent you want to be. And then the market trades lower. So in this case, you would have a big shadow here. It does, in fact, engulf the prior candle. And then it does trade lower. Stop loss goes up here above the high. This one actually would have survived the pullback. And they almost always have some sort of a pullback. It would have survived the pullback, and then it fell down all the way down to the next zone, which is an easy target to take on these. So this is an example of what you would call a big shadow. It engulfs the prior candle, and then it trades lower on the very next candle. It's got a close down near the low. It's the biggest candle we've seen of the last 6 candles. Let's see. The pips, it's about 128 pips. And this candle over here, of course, is not as big. That one's only 90 pips. So it's the biggest candle we've seen since, you know, this candle over here, basically. So it's a big candle. It trades lower, comes back, and goes all the way down to the next zone. And in fact, if you were waiting for it to go to the next zone down here, you would have been stopped out, because I would have moved to break even once it got close to the first target. Then it pulls back and actually stops you out over here. So that's an example of a bearish big shadow, which is, of course, another pattern, another naked forks pattern. It's a special case of the engulfing candle. Now, let's go back to the daily chart so you can see my list. So when we're looking for swing points, I want to know, one, where is the market swung before? Where is it reversed before? And I know that by going to my higher time frame chart and drawing in my support and resistance zones. If you can't see them, the line charts are the way to go, right? The line charts will make it easier. Then I wait for the market to get there patiently, and it takes some time. And you can see here, the market's not always sitting on one of these zones. It takes some time for it to do that. But when it does, then I look for a repeatable pattern, a bearish or bullish pattern that I can use. And then after that, the next thing I want to see is and this is really important, guys, this concept, this is a really critical concept, this idea of the market having space. And what do I mean by space or room to the left? What I mean is that the market's printed this pattern at a spot in the chart where it hasn't been there for a long time. Why is this important? Well, it turns out that if you go back and historically scroll through the charts, you'll find that usually the market doesn't go to a place and just kind of sit there for a long time and print a lot of candles on top of each other and then turn around. Instead, what the market usually does is it'll go print some candles at an area where it hasn't been for a long time and bounce hard off of that. Okay, so for example, right here, now we never know where the swing point's going to be, but if we are, one, looking for a spot where the swing points have been in the past, two, if we're looking for a swing point where we see a repeatable pattern, a reliable, repeatable pattern that shows that, yes, indeed, you know, this is a reversal pattern. And three, if you see this pattern happen away from the other candles. So let's say that we had this isn't really a reversal pattern right here. This is a, no, it's not one that that I've tested anyway. But if this were a pattern here, we could take this little box and scroll it across and say, how long ago did the market print candles here? And it turns out it was a long time ago that the market printed at this exact spot. In fact, it was about 111 candles ago, 112, 100, it's been 110 candles on the 4-hour chart since the market printed in this region. That's a pretty good sign, right? That's not bad. That's a pretty good clue that maybe what we have here is a reversal, or we could potentially have a reversal. Does that make sense? Is everyone cool on that? Yeah, it's one of those things that if you don't really you know, if you don't fall, if you're not the type of trader who, you know, peels back and looks at the big picture, a lot of times what happens is we get so, like, especially if you're trading with indicators or something, you zoom in and you get so focused in on, you know, the indicators crossing or the moving averages, prices bouncing off or whatever. You don't think, okay, well, wait a minute, hold on. Has the market been here recently? And if the answer is no, and it's in an area that you know has historical support and resistance, and it's giving you a reliable pattern, that's a really good clue. And so we'll go back to our daily chart here and we'll put that in there. That, whoops. So we're drawing support and resistance zones off a higher time frame chart. We're looking for patterns that are repeatable, testable, that have shown to be reliable for us. And then finally, we're looking for these patterns to print with space. These patterns print with space. So that's the other, you know, critical part of this. So yeah. Let me know if there's any questions on these. So you're looking for a zone, you draw the zones on the higher time frame chart. You're looking for a repeatable pattern like big shadows, kangaroo tails, moolahs, whammies, you know, whatever, pogos. These are the ones that you want, that you've tested, that you know work for you, that you can see them and you can reliably enter on them. And then you're looking for space. Now let me show you kind of what happens with this example that we're looking at here. The market actually prints an interesting pattern here. Let me show you. So you go back here. So what happened was it printed this bounce off the zone. It went up and then it came back down and bounced again. And actually, it gives us a pretty good pattern. This is what we call, this is what I call the, does anyone know what this is called? What's this one called? It's called the whammy. Okay, it's the whammy. The whammy is a special case double bottom. Now, what happens is with the whammy is you get a bounce. The market bounces off a zone, comes back up, comes back down, bounces slightly higher than the first bounce. Now, that's critical, right? Right there. So here's your question. Okay, cool. So the low, what do you think about non-farm payroll tomorrow? Christian, I'm going to do a webinar on that. So, you know, okay, the way I approach non-farm payroll, as you'll see if you go to the webinar, is essentially, Christian, all I'm really trying to do is trade it if it gives me a breakout on the 5-minute chart and there's surprise news. If there isn't a clear breakout that fits my naked trading rules, or if we don't get surprised with both numbers, and numbers I'm talking about, of course, the so I'm not guessing or whatever about what's going to happen or putting a trade on before or anything like that. Instead, what I'm going to do is I'm going to wait and see what the news is. If the news is a surprise with the unemployment number, the unemployment rate, and the number of jobs, if that's a surprise and it's congruent, so like a lower than expected unemployment rate and higher than expected jobs created, then I will look for a special 5-minute chart breakout trade. Basically, it's a news trade, and you can do that with anything. You can do it with interest rate announcements. I think the Bank of England's actually got interest rate announcement today, right? So you can do it with any kind of high impact news. So if you go to FX Street, look for the high impact news ones that have the 3 exclamation points, the red ones, red 3 exclamation points, and you can just use this simple system on any of those. But yeah, so I don't really guess, Christian. I just go by what happens essentially. And even then, unless it's a really good, and there are actually more surprises than you would think. So, all right. So so cool. So if you are interested, you can go to that, and if you go to FXJake there and put your email in, I'll send you an email when we have the webinar. It's tomorrow. Yeah. Okay. Well, here in Asia, it's tomorrow, but I know it's. Yeah, technically it's tomorrow over in Europe too, because it's Thursday morning, right? Yeah, it's Thursday evening here in Asia, and it's Thursday morning over there. Okay, so let's keep going here. So this special case double bottom, this whammy, is really cool, like, because I've got a low here at 100.09, and then I've got a low here of, oh, is it lower? It's not a whammy. Sorry, I thought that this one was actually lower. It's 1 pip lower, this one. Okay, so it's not a whammy. All right, forget it. I was gonna share that one because I thought it was a pretty good whammy, but it's not. So okay, let's see if we can see a different pattern. Pom Pom. I mean, the whole point of this, if we could have just erased a few pips off this, it would have a higher wick here, right? Then what we do is I wait for a bullish candle, okay, to confirm. The stop loss goes down here below the first swing low because it might pull back like it did here, and you don't want to get stopped out if you're below the second swing low. And then we wait for the next candle to trigger it. So in this case, the risk on this trade, I didn't take it, but if I had seen it, I would have been interested in this one with a risk of about 68, 69 pips, okay? And then you would have survived that pullback, right? And then you have a couple of targets that kind of make sense here. One is right here for about 80 pips, and the second one would have been good for about 180 over here. And that's the second, that's all the way up there in that zone. No problem, Christian. Glad to help. Okay, so does everyone see that? Does that make sense? So it's a bounce and a double bounce, a bullish candle confirming that it's going to move away. So we don't really know what's going to happen here, but when we see this really strong bounce, we assume that that's it. It's made the bounce. It's going to go higher now. Now that, of course, wasn't the case here, but it did in fact trade higher and high enough to trigger a buy stop above the high. So that candle would have triggered the trade, would have pulled back then and draw down for about a day or so, a day and a half, and then finally you're in some profit. You get up to this level here where you could have gone to break even or maybe taken a little bit of profit, possibly actually would have definitely been stopped out there if you were at break even. But if you hang on, you do get to that next zone up there. Okay, cool. So essentially, when we're looking for swing points, you're going to look for space or room to the left unless you get a double top or double bottom. That's sort of the caveat here that I want to highlight, because a lot of times people, they say, well, I can't take that trade because there's no space. Well, the reason why there was no space was why? Well, because you were looking at a double bottom or a double top. Now, if you have a double bottom or a double top, I prefer to trade them as ghost peaks or whammies and moolahs, which basically means they have to fit a certain pattern. So double tops and double bottoms will not have space. Only the first touch will, but the second touch is not going to have space. It's going to, by definition, it's not going to have much space. Only that first touch. Are there any questions here? Does that make sense, guys? You're all good on that? Let me know if you have any questions on that, or if it's all good. Okay. All right. So I am going to show you. I promised that I would show you a live chart. So this chart right here is the New Zealand dollar USD 4-hour chart. Now, essentially, this is what we call a squeeze play. All right. This isn't in the book, but I want to share this with you. What you see here is this. See how it's going boing, boing, boing. The trend line is pushing it up against the horizontal support and resistance level. And then finally, bam, it breaks higher. Woohoo! And then it comes right back down. Now, it should bounce off of this and go higher to confirm the breakout, but it didn't. It got right back in there. And now we're back up and we're sort of messing around. We're flirting with another breakout. Now, if I wanted to trade, okay, so if I wanted to trade the swing point, the bounce, what I really need is I need confirmation that the breakout is good. In other words, it's going to keep going higher. And the only way you can get that is when the market comes back down and gives you a giant, big, huge white candle on this, 72.95. You might as well call it 73 level. And it never did that. Does everyone see that it never did that? Even though it broke higher here, when it came back down, it didn't give you the big bullish bounce. Now, really, the best ones of these, if they're going to fail like this one did, they usually fail like within 2 or 3 candles max. Usually 1, 2 candles, they're right back in there. Okay, if they're going to fail. If they're going to come good and stay up there they usually stay up there for several candles and then finally drift back down there. Maybe some news or whatever sends it back down to the zone and everyone's freaking out, and then bam, it bounces right off of it. I think it looks like we're going to retest it and we're going to try and break out again, but at this stage, it doesn't really fit my pattern anymore because it printed this over here. Really what we want to see. So, yeah. All right, cool. Let's move to Singapore dollar because this is a trade that I really like right now. This is a daily chart trade, and this is a breakout. Okay, this is a breakout. So I want you to pay attention to what happened when the market came down there. It did a bullish big shadow. I think, yeah, I don't know if it's actually bigger than that candle. The range might have been smaller than that candle. 97 pips in this one's. No, it's bigger. So this is the biggest candle we've seen in 1, 2, 3, 4. Ooh, maybe the last 5 candles. Let's see. Yeah, so it's not bigger than that one. So it's the biggest candle we've seen in the last 4 or 5. And then the market does trade higher, pulls back, and then goes whoop. But the important thing is, what did it do when it got to the zone? It bounced, okay? Then what happened next time it got there? It bounced hard, right? Then what happened next time it got down there? Again, woohoo, it bounced hard. And then now we've come back down, and only 2 days ago, we closed below the zone. This zone I have at 41.35, 4135. Now, what's interesting to me about this is that it fits the pattern. So although we were talking about swing points, the swing point on here is actually off of this zone right here, this 41.35. Let me color this blue so it stands out on the chart and so you know which one I'm talking about. So essentially this is called the Acapulco trade, by the way, and we'll do a whole webinar on this so you guys can get all the rules and everything. But essentially what it is, it's a breakout, and then the very next candle comes back up and retouches it, just like we were talking about on the New Zealand dollar 4-hour chart. That takes a long time for those to retouch, but this is like a 2 candle, like boom, boom. So it breaks through, comes back up, retouches, and now I can sell today if it breaches yesterday's low. What was yesterday's low? At 1.4066. So if it goes 1.4060, I sell. I put my stop loss up here above the big red candle, which is the breakout candle. And then I'm targeting 39.50 or 38.40. Now, if you don't want to target 39.50 because it's too close, 38.40 makes a whole lot of sense. So this is an example of basically the swing point is essentially here. This is the swing that you're trading, right there. That's the swing point. So this is the level that's been support, support, support forever. It finally broke through. It came right back up, and then whoom, it's going to bounce off it. So if this pattern holds, it will trade lower than yesterday's low today, and it will trigger the 1.4060 sell. Any questions about that? So this is, you remember I was saying before, if you're looking for reversals, if you're a reversals type of trader, you can kind of trick yourself into trading with the trend by getting in on these trending markets, and you get in on the retracement move, on the end of the retracement move. And that's essentially what the Acapulco does. It's a codified version of, getting in at the end of a retracement move. So it's a breakout, and then you're kind of confirming that it's a breakout. And if it fits that confirmation pattern, then you get back in on the direction of the breakout. So that's basically all this is. Yeah, it's really simple stuff. All right, I'm open. So just to recap here, if you guys have any charts you want to have a look at, we can certainly do that. I can scroll through those, but I'm open to looking at whichever charts you want to see. But for right now, I just want to show that I'm going to take a trade on the Singapore dollar probably today on that daily chart I showed you. And then also that if you're looking for swing points, these are the things I would test. If you don't have Forex Tester, I don't know what to say. Help you. I mean, you know, you're just rolling dice. Might as well go to the casino. If you've got Forex Tester, now you have some things to test. Test repeatable patterns that you see on support and resistance zones that you draw on the higher time frame chart. Make sure that these patterns print with space or room to the left. And know, of course, that if it's double bottom or double top, it's not going to have space, but the first touch should have space. The second touch, by definition, will not, but the first touch should have space. And you can always look at this space. You can always visualize this space. You can always figure out if it has space by doing what I've done on these charts, which is to take a box and essentially pull it across so that you can see it. Oh, where is it? I just lost it. There it is right there. So you take that box, you pull it across the area of the pattern that has printed a unique area of the chart, which in this case is obviously the red candle right here. And then you see how far has it been since, and then visually I can see it's been a long time. That is a long time ago on the 4-hour chart, 110 candles or whatever it was. Cool. All right, any charts that you guys want to see? I've got a couple of interesting ones. I think that the Aussie Kiwi is quite interesting. It's obviously quite bullish. Now, bam, there it goes. Also, the pound Swiss is interesting, and here's why I think the pound Swiss is interesting. A lot of traders are going long the pound Swiss. So I suspect that in the very near future, we are going to see a reason to sell the pound Swiss, and it's probably going to be a nice long move. I know it's not now, and I got in a little bit earlier this week, but at some stage we're going to see the pound Swiss fall apart. And I believe the reasoning behind this is here. If you go, let me just show you, fxjake.com/crowd. Show you this. You go here, it just redirects to an Awanda site. And essentially what you're going to see here is that a lot of people are buying silver and a lot of, well, actually, look at this, Euro Swiss now and, yeah, gold. A lot of people are buying gold and silver, and a lot of people are long the pound Swiss and the Euro Swiss. Now, earlier in the week, it was actually, as funny as this sounds, earlier in the week, this was higher. I mean, last week it was like 71%. Once it gets up to 71% or 80% on the silver and gold, what you can do is you can start to look for a pattern, like we said, a swing point and a pattern on a horizontal support resistance level and get in, because essentially there are no more buyers. Once this gets to 70% or whatever, you want to be in the small group of people that are making money. Now, here's another one I'll show you, which is what? New Zealand dollar. Look at that. All of these people are doing what? They're trying to sell the New Zealand dollar. And what that means is as this inches up towards 70%, it's going to be a really good idea to buy the New Zealand dollar, right? Be a really good idea to buy the New Zealand dollar. Remember how we just saw the Aussie dollar taking off like a bat? Like just whoosh. Look at this. Most people are shorting the Aussie dollar. This is updated like every 10, 15 minutes. So most people are actually shorting the Aussie dollar, even though it's on a tear right now. Isn't that interesting? Yeah. And so you can use this as a gauge to say, okay, well, I really want to look for a reason to short silver, short gold, short the pound Swiss, and go long the Kiwi, right? These are the ones, maybe go long the Euro Yen if I can. These are the ones I want to be looking at. Again, the reasoning behind this is, and you can go back and check the historicals on here and see price versus the historical ratios to know that I'm not blowing smoke. But this is it's not like a reason to take a trade, but it's like an alert. So if you go to fxjake.com/crowd, that will send you here. And like I said, they update it really, really often. So it's a great tool to use. So let's take a look at some of these pairs here. So like I said, pound Swiss, maybe the pound Swiss gets up to this trend line, or maybe it gets to this horizontal level. I like the horizontal levels better. To me, they're more useful. So that would be around 126.50 40, which is, you know, really only about 70 pips away from where it is right now. Reversal pattern there, but that could still come. What were the other ones? We were talking about euro pound as another one, right? So here's your euro pound chart. And remember, if you go and look at the crowd, what's the crowd doing? On the pound, or sorry, the euro pound. Sorry, let me take a look. There, oh, that's 40.50. Forget that. Sorry. It was yesterday, but today it's not even close. So forget the euro pound. We'll go to the euro yen and the Kiwi. So in the euro yen, you know, the euro pound and the pound Swiss tend to kind of go together, but not right now. The euro yen is the other one I want to show you. Where is the euro yen? There it is. So remember, everyone's shorting the euro yen. They're shorting the euro yen. So what does that mean? Well, look for a reason to go long, because 61% of the traders are selling this chart. They're selling this chart. They think this is a bearish chart. So we want to look for a reason to go long. What's the weekly have here? It's really, you know, really this is a, I'm going to get rid of the stuff here. Really, this one's tricky because what I would call this is kind of like what, you know, it's like a windsock. So you see how the market's been down here and it sort of wedged up and then wham, it went up. And now it's found support at the next level here, right here. And it's kind of just consolidating. What we could get is, and I know this sounds crazy, we could get a weekly pattern, like a weekly trendy kangaroo tail where the tail of the candle is well below the low, all these lows to the left here. And then the head of the kangaroo tail is kind of up inside this box. And then it trades higher than that high the following week. That would be a trend continuation here with the euro yen. That would be pretty cool. Because the next zone would be all the way up here at basically 126.90. So, you know, if we were to have that candle and it printed down here like this, let's say it had 300 pips of risk, you might have 300 pips of risk and, you know, 450 pips of reward, or 220 pips of risk and, you know, 500 pips of reward, something like that. And then, of course, where's the next level? Well, that one's kind of easy to see too. I know it's kind of, you know, after a while you get to see these, but the line chart helps you in the beginning. Because there's your resistance, there's your support, there's your double bottom support, there's your resistance. So that's why I drew that one there. See? Okay, cool. All right, let's keep going here, guys. I want to show you some more. What time frames do you trade? Okay, pound. Okay, we're going to look at the pound and we're going to look at the time frames. Okay, so essentially, I trade mostly daily and weekly charts. However, I also trade 4-hour and 1-hour. I like to trade the 8 hours. You can set up 6-hour, 2-day charts, 12-hour, 8-hour. All of those are great, but I have been trading the 1 hours lately. And the 1-hour charts, I like to trade on like strong trends. So for example, see how the Aussie is taking off like crazy? I would be looking for reasons to buy the Aussie, okay? You know, because the Aussie is in such a bullish trend right now, and it did kind of this daily squeeze play thing here that we were talking about on the Kiwi. So because it did that pop thing, you know, what I would do is go down to the 1 hour. We've done other videos on this. Go down to the 1 hour and wait for pullbacks on the 1 hour. So you can get in really tight. You can get in for like 21 pips of risk, you know, and get 80 pips, 100 pips, 120 pips. So you get really good reward risk ratio on that. But you really have to be patient and wait for the trends. Canadian dollar. So I do trade the 1 hours. But most of my trades will come on the daily and the weekly. And then when there's a strong trending pair, I'll take the 1 hour trades during the Europe or New York session only. I don't take them from about 2 p.m. New York time. So that's when I stop. I actually have one of my students actually created an EA that will take the trades for me. So I just slap it on the trending pairs and it will manage them and enter them and move the stop and all that. Matthias says, okay, pound. Let's take a look at the pound because I think Pound's been really weird lately. It's been kind of crazy. I'll show you. So back it up. I think what we're seeing here is dollar weakness. I think that's probably going to be the case for some time, at least, maybe over the next month or so. And so to me, the pound is going where? The pound is going here. The pound is going to 28.50. So to me, kind of like the Aussie, I think the smart thing to do with the pound is to just wait for the pullbacks and then get in on those pullbacks and ride that sucker as far as you can all the way up here to the 28.50 level. And by the way, I know that there's this level right here kind of in the way, but that's not, this level is not near, I mean, yeah, 2,700 is definitely an issue, but we're basically knocking on the door. If we can get through 2,700, 2,720 today or tomorrow, then it's clearly going to run into trouble next when it gets to these lows where the market bounced here repeatedly. And that's 28.50. And even then, it could get through those and still run into the big trouble here where all these candles were sitting, and that's up there at 29. So I think the pound's going higher. Does that make sense, Mattia? Yeah, I'd say definitely going higher. Yeah. Are there any other charts? If there are any other charts that you guys like, or you want to see, let me know. Remember, we were looking at the open position ratios. The other one, it would be the Kiwi. So we obviously know that 73 is a critical level here. It hasn't broken through like the Aussie did, but that's kind of, that's where to watch it. As far as gold, the nice thing about gold is that, let me find a better chart. That chart is really bad. I'll show you silver. Silver's in a nice trend. So again, what might we do? We might look at these 1 hour charts and see if we can get on the pullback, get in on the pullback, get in there. I'll pull up another gold chart. And I'll put the daily on here. It's interesting to me that silver is more bullish than gold. And what I mean by that is silver has taken out the new high, is got a new high, whereas gold's still kind of struggling to take out these highs over here. Whereas if you looked at the silver one, you can see it's already clearly taken those out. Does everyone know what I'm talking about here? So you can kind of do a little bit of intermarket analysis when this happens, and you go, okay, well, I've got gold here on the daily, and I'll put silver on the daily chart too, so we're comparing apples to apples. But what's interesting is how silver has already made the break and has broken above these swing highs, and in fact is continuing onward, whereas gold is still running into some trouble right there, and it hasn't made the big bust yet. So there you go. So putting on our naked trader hat, how would we trade these? Well, for gold, if you wanted to go long, you'd have to wait for it to break above 12.18 and then trade up there and then come back down and bounce, just like I was talking about on the Kiwi. Whereas if you're going to trade silver, you have a couple of options here. You could wait for the bounce off 1730, 17.30, or you could look for a lower time frame trend continuation pattern. So here, see what this is right here? Remember I was talking about that weekly chart on the euro yen, and I said a trendy kangaroo tail? That's a trendy kangaroo tail right there. This is a 4 hour silver trendy kangaroo tail. That's what that is, and that's in the Naked Forex book. What that is you get consolidation, then the kangaroo tail, ideally if you go back, you're gonna see that this is a nice zone here, and that's why it's consolidating there, right? But then the kangaroo tail, the body is up there with the rest of them, but the kangaroo tail itself has space. Now, it's never going to have a lot of space because by definition, you're in an uptrend or a downtrend. So it's going to run into candles to the left. However, the very next candle trades higher, and here we are. So that's a trendy kangaroo tail right there. That is a bullish silver 4 hour trendy kangaroo tail. And that's the kind of pattern that you might look for on going forward on silver because it's in an uptrend. Same thing on the Aussie, same thing on the pound right now. So hopefully that helps. You don't have to necessarily wait for the bounce. You can wait for the pullback and the when it rests as that market rested, which is basically how I see it. A trendy kangaroo tail is basically the market rests, it consolidates, and then it has like a false breakout, like a false reversal, which comes through as a trendy kangaroo tail on the chart. We're always trading emotions, guys. People will say, how do you know these work? The reason the patterns work, and don't take my word for it, back test them, use Forex Tester, verify, make sure that they fit with the way that you see the charts. But the reason they work is because we're trading these extreme psychological events, extreme fear and greed on the charts. That's why you get things like kangaroo tails and double bottoms and big shadows. All of this stuff, pogos, they're all patterns where the market is just showing us that the participants are freaking out. They're just going, wah! And that's why we get these massive reversals and bounces. That's basically what it's all about. Are there any other questions? Did anyone have any other questions, or are we all good to go? I thank you so much for your time. I know that you have a busy life, busy schedule. I appreciate every one of you. Hope to see you at another webinar. I hope you're doing your back testing and earning your pips, and through your building up your confidence through Forex Tester. Even if you've been trading 15 years, like I have, it helps to build your confidence, especially when you go through a drawdown. It really will help. Thanks, guys. Have a wonderful day. I wish you happy trading, and we will see you next time. Take care. Bye.